Hello and welcome to All About Your Company. In today's episode, we're going to be covering a company which is linked with the logistics space in India in a big fashion. Titagarh Rail now just doesn't do rail. They're also getting into naval systems and building their own port. And we'll try and get a perspective as to how that is playing out. But more importantly, it's into the freight rail segment where there's going to be likely a very large order which is to come through, a tender of nearly 1 lakh wagons expected to come through. And here, Titagarh has a very large market share. In India, it has a market share of 25%. So you're likely to see a very large order book accrual come in this year itself. Also, the management has highlighted that there is going to be a doubling of demand, standalone demand, with regard to freight logistics in the next 4 years, which is by FY30. Titagarh will likely benefit in a massive fashion if that were to happen, because you will have old freight wagons which retire at around 4 to 5% of the current existing wagons in the country, and then you will have a doubling of the potential new wagons which come in. So it's going to be a double headwind of sorts, which could a double tailwind of sorts, which could come through. Now let's talk a little bit about the company, as we always do in this show. It's in the cab goods and railway space, as is evident. It builds freight wagons, passenger trains, and metro coaches. So there's plenty to look at in terms of the diversification of the product as well, and the order book as well. It was founded in 1997 in Kolkata by the Chaudhary family, and we will speak with Pritish Chaudhary as well. He's Deputy Managing Director at Titagarh Rail, who's joining us in just a few minutes from now. Market cap currently at around 11,000 crore. When you're looking at the story, it's basically a story or movement from freight, which is the old economy sector, towards passenger, which is the new economy and the higher margin sector as well. So that's how you would typically want to see Titagarh. It's mostly building cargo wagons, or was mostly building cargo wagons for the Indian Railways, and now there's a huge shift towards passenger trains and city metros as well, where it's a more premium end in terms of the segment. The shift is happening fairly quickly and at a fast pace. The old freight wagon business is slowing down. Some reason of that is the kind of pipeline that has come to all of the entire system is very, very slow. And at this point of time, if 1 lakh wagons were to come through in terms of the tender, then that could be a meaningful turnaround for Titagarh, because they have a large spare capacity which they sit on. So the whole story is can the company run on the twin engine of passenger and freight, at least at this point in time? And of course, then you have metro and other levers as well. We'll talk about those. In terms of products, let me quickly list them out. First is Freight Rail Systems, and here they do open and covered rail cars for bulk cargo, which are wagons essentially. They do specialized wagons, custom built. They do wagon leasing as well. That's a new business for them relatively. Then there's passenger rail systems, and within the passenger rail systems, they do passenger coaches, which is rail cars carrying people on long distance trains, of course. Then there's metro coaches, which is train cars for rapid intracity transport. And then you have Vande Bharat trains again, which is intercity trains. Vande Bharat sleeper coaches also is what they do. They do electric commuter trains as well, which are called EMUs, and they do train maintenance, which is the longer term upkeep of the trains. Then there's component systems, propulsion systems, train control and management systems, steel castings is a smaller part of the top line. And forged wheels, which is the other piece which they're doing with RK Forgings, and 4951 JV with RK Forgings, which could also have a revenue potential of around 500 crore right off the bat. You then have other engineering businesses which they do, bridges, heavy earth moving and mining equipment. They also do defense engineering, shipbuilding, which is smaller in the overall scheme of things. And shipbuilding is now done through a separate group subsidiary as well. In terms of freight rail, let's focus on the largest parts of the business here. Freight rail is where Titagarh has a significant presence. It has around it actually makes around 25% of all wagons in the country. It has an installed capacity of 12,000 wagons, currently doing a run rate of sub 500 wagons a month. So 1,000 wagons a month is what they can do. They've done just maybe 1,300 wagons in the current quarter, which is far short of what they are able to do at peak. The production as of Q4 was 600 to 650, and the trigger is going to be new tenders over here. Let's talk about passenger rail as well. This includes metro coaches, by the way, this business. The metro coaches is expected to 3x in FY27 versus FY26 from 63 to 200. So there's a large runway and a large potential there. They've exited from their loss-making Italian business, which is Firema. So all of those losses are now out. We're going to look at this as a completely solidly profitable business going forward. That's the way they think of it. All provisions are done. And now they design everything out of India. They have over 130 engineers which are designing products based on whatever IP they've acquired from Firema in India itself. Talking about shipbuilding, here they have their own subsidiary, which is a shipyard, and they also have a recent, an order win recently in this regard. Let's talk about the business model. And here, typically how it works is they win large orders from based on competitive bidding. Freight wagons, revenue is booked once the wagons are inspected and dispatched. On the passenger train side, revenue is booked gradually based on costs incurred over time. Freight contracts often adjust automatically if steel prices rise. In the passenger business, generally, it's all built in, and therefore when steel prices go up, you typically don't get a pass-through. It makes its own castings, wheels to control costs and quality. They have large fixed costs, design engineers, test facilities, and tech licenses. Very few Indian companies can actually build both wagons as well as trains, and Titagarh therefore has that particular speciality here. Each big contract has to be is a competitive based contract, and therefore that is one of the risks here. Let's talk about clients as well as geographies. Largely India centric is how Titagarh is structured. These are typically its clients, Indian Railways, government and city metro corporations. That's how they are structured. In terms of the latest, and this is critical, right? It's differentiated. They've won a 950 crore metro coach order from Europe. I told you, largely it is India driven, but now they're starting to see opportunities outside India. So we'll try and get a perspective from them there. That's a 950 crore metro coach order coming in from Europe. The other one is Hyperloop, and this is still at an R&D stage. Here, there is a partnership with TUTR Hyperloop, which is essentially an IIT Madras incubated startup. This is completely in R&D phase, but you could well see a dramatic development if this were to play through maybe 7-10 years from now. So they're investing in the future of technology, especially on the logistics side of things. The target is to have a 1,000 km per hour Hyperloop development in India, and that's what the thought process is. Let's talk about the financials. And in terms of revenue growth, last 3 years, you've seen a softish number, and that's because of the freight side of things. You saw sharp increases both in FY23 as well as FY24, but FY25 has been soft, and on that, FY26 has actually seen a downtick. This might well change as the passenger side of the business picks up. Mind you, they did just 63 wagons last year. They're doing 200 this year. That's one. Second is, as and if the freight order comes through, and that could be big on the revenue side of things. But for the moment, the growth looks muted at the outset. Okay. Now let's talk about EBITDA. EBITDA has grown at 10%, so margins have gotten better as passenger side of the business has picked up, and that is slightly better margins, at least for the moment. Let's talk about profit, largely flat on a 3-year CAGR basis, but we did see a spike up in FY25, as you can see on your screen. Let's talk about the Q1 numbers, and here you're starting to see traction, especially on the passenger side of things. 13% revenue growth, EBITDA up 47% YOY, and PAT up 71% YOY. So standout set of numbers when you're looking at it on a YOY basis, and that is largely because passenger has picked up substantially. Nearly the whole of the production of last year has been done, half of last year's production has been done in Q1 alone this year in one single quarter, and QOQ it will continue to go up is what the management has said. Let's talk about the operational side of things, the EBITDA margins, and you'll see that on your screen. What the passenger side of the business has clocked is a 19% EBIT margin this time, which looks stretched. We'll try and get a perspective as to how this evolves. but that's EBITDA. If we can just put out the margin trajectory, 11% FY22, 9% FY23, 24 was 12, 25 was 11, 26 was 10, and then you've got 12.3 odd. Now, in terms of the book to bill, very good book, and this is on a standalone basis. You'll see it at 4 times on the consolidated revenue. I've taken consolidated revenue and standalone book, and that is just to be conservative. On the consolidated book, including JVs, they've got an order book size of 27,000 crore. That's extremely large. So no concerns on that front. Let's talk about the balance sheet now. 2,500 crore in terms of the book value of the company, and therefore translates to around a 4.2 times book to the market cap to book. That's broadly how it's structured, at least at this point. Let's talk about borrowing. 520 crore is what they have in terms of borrowing. They're also doing capex, especially in their shipyard. The cash bank balance is 317 crores, so comfortably placed per se. No concerns on the balance sheet side of things. Cash flow. Now, this is a bit problematic, and there can be lead and lag on this because your working capital requirements do get stretched in a business like this, and that's exactly what you're seeing on your screen. How FY24 and 25 evolved, you can see that FY26 relatively is better as there's been an unwind. Now, the target is to reduce the net working capital days to 75, but that is going to take a year or two at the very least. We'll get a perspective from management how that works out. Let's talk about ROC. The ROC ratios have been choppy, and we're currently sitting at 11%, and therefore we've given this a neutral in terms of ROC as they invest in new businesses and those new businesses ramp up. I spoke about wheel sets, I spoke about shipyard, I spoke about passenger rail. All of those businesses need to ramp up, and as they ramp up, hopefully we'll start to see those ROCs inch upwards. Let's talk about shareholding pattern. Currently 41% owned by the promoter group, but what you're also seeing is FIDI participation is large, 26%, and public holds just 33% of the company. So that's how it is, fairly okay in terms of the shareholding pattern. Let's talk about the analyst recommendations. Here analysts are super bullish. 11 buy calls, 1 hold call, no sell calls with a 28% upside is what analysts are seeing at this point of time. By the way, over the last 3 to 4 months itself, the stock is up 35%. So on top of that, analysts are seeing another 28% upside from here. Valuations, 5-year average PE is around 34. Current 1-year forward PE is also 34. The 5-year range is 21 to 60. So you're at somewhere at the midpoint, but on the lower side of the midpoint of that range, 5-year range. Now, in terms of what the management is thinking and how FY27 looks, let me bring on board Pritish Chaudhary, who's the Deputy Managing Director at Titagarh Rail, joining us this afternoon to give us a sense as to how one looks at least the Q1 numbers. Pritish, very strong Q1 for you, and understandably so, therefore, execution has started to pick up. But the big question, of course, is the freight side of the business. Does that 1 lakh wagon order come through? That's really the golden question. And if so, how much of that will you look to be taking in terms of the pie or the share?
So firstly, good afternoon, and thank you very much for having me. As far as the 1 lakh wagon tender is concerned, we know as much as perhaps you do, because we've also read multiple media reports, some conflicting with others, some saying 70,000 wagons, some saying 1 lakh wagons. From our perspective, the question is not really whether the demand will come, because over the past years, the railways has invested a lot of time, a lot of money in really building up the infrastructure and building up the ecosystem. They've built the tracks, they've built the signaling, they've built the stations, they've electrified. And the only way to really utilize that capacity is to load more and more freight, which is by adding more and more freight wagons. And the targets of the government remain unchanged, which is by 2030 to get to a 3 billion ton of freight loading, which currently stands at only about 1.56 or 1.6 billion tons. So logically, the question is not whether that demand for or whether that tender for wagons will come. The question really is when will it come, whether it's 1 quarter, 2 quarters, or 3 quarters later. As far as our aggressiveness in the business, we have historically, as you very rightly mentioned, maintained a market leadership. And going forward, when the new tenders do come out, we would intend to maintain those.
Hmm. And if it were to come out, how quickly can you scale back to 1,000? Because right now you're calibrating. I mean 1,000 wagons per month for viewer perspective.
So that should not be too big of a challenge. You see, we've already had months in the past when the order book was large, when the number of wagons in the order book was large. We've had months where we've consistently produced over 1,000 wagons in the month. So scaling back up to that number will not be too much of an operational challenge because the base facilities and the infra already exists.
Hmm. And you've done 19% in EBIT margins on the passenger rail side of things. Is that a one-off? Is that sustainable? Because you've guided for 15 in the medium term. You've done 19. I mean, just the numbers look extremely strong.
So the reason for that is rather simple. You see, the most of the execution in the first quarter was on account of Bangalore Metro coaches, which for us is almost like a conversion contract or a manufacturing contract, where the margin percentages are always a little bit higher in any business. So for us, for the passenger business, a sustainable EBITDA margin we still continue to guide would be around 11 to 12% in the short term with operational leverages kicking in, once we're able to ramp up production to 45, 50 coaches a quarter, we expect the margin to be expanded by about 1%, so about 12 to 13%. And then by 28, 29, once the propulsion technology absorption is fully complete, and we're only using our own propulsion in the metros and trains, that's when we can foresee a further margin expansion to almost 14 or 15%, 15%.
So the propulsion, the in-house propulsion system should add another 200 bips of margin. Is that the right way to think of it? What's the timeline for that to come on stream for you?
So the timeline, we've already started work on that. I mean, we're already working with ABB on certain projects to co-develop, and we've already started doing our work on that. So by 2028, 29, we should be in a position where we can use our own propulsion systems.
You've recently won an order out of Europe. Now, that's a big one because it gives you a foothold into a market which typically you're not known for. But give us a sense as to how large that is for you and how recurring can this be, this kind of a trend?
So while I don't know, I don't know where that information comes from because no such order has been awarded or announced by the company for that matter. With that said, we are building a facility here in Uttarpada, which is capable of executing to a global standard. In fact, the metros that we are making for the Indian market are absolutely as per those standards. They all follow the highest ends, the highest technology norms. So going forward, we would be looking at the export market with a lot of potential. But for the moment, I am sorry to say that this information I don't think is correct.
No, okay. So fair point. All right. So that's probably an error on our part. But give us a sense, the other levers that you have, the metro, and you have plenty of those projects playing out. Bangalore, Pune, Gujarat, as well as Mumbai. All four are big metro orders for you. In terms of execution, do all four start FY27 itself? How confident are you of that?
So we are very confident. In fact, Ahmedabad, the prototype has already been delivered. The Honorable Chief Minister of Gujarat himself was actually in our factory to inaugurate and receive the first train a couple of months ago. For Surat, very soon, in fact, we'll be able to share similar news of the prototypes being delivered. We're now nearing the final stages of completion. For Vande Bharat as well, I'm happy to state that the project is on track, and by the end of Q3, financial year Q3 or the very beginning of Q4, we'll also launch the prototype for that. So yes, the projects are going on simultaneously and they're on track.
Okay. And with regard to Vande Bharat, how is that progress tracking? If you can give us a timeline perspective of that.
So that project is coming along very well. I'm happy to share. As I mentioned, by the end of Q3 this year or the beginning of Q4, the very beginning of Q4, we'll also launch the prototypes for our Vande Bharat sleeper. And then subsequently, as per the timelines in our contract with the railways, we'll continue with the deliveries of the trains.
Your freight, your total freight production has fallen quite a bit. that would just be tweaking, right? And would it continue to fall if at all this 1 lakh wagon or 70,000 wagon tender or whatever that number is doesn't come through? Will it continue to fall? And of course, it's calibrated in terms of the move, but would that be something that you would anticipate? And anything in terms of measures that you are taking internally to cushion that that part of the business?
So, as I mentioned, for this year, as I mentioned also in our investor calls a few days ago after we published our results, we intend to manufacture anywhere between 600 to 650 wagons for the rest of this year. And the private sector wagon orders, which account for about 10 to 20% of the total wagon requirement, are looking healthy, and Titagarh is aggressively pursuing private wagon orders from private sector companies. So from our perspective, the wagon production should not fall below 600 to 650 wagons per month.
Could you give us a perspective on two critical parts of the business? One is the wheelset, the JV with RK Forgings. You're already doing trial runs over there. How quickly does production ramp up? You have a capacity to do 500 crore worth of revenue from there. Of course, it's a 49-51 JV, my understanding. The second part is the shipyard, where you've pushed the timelines by a couple of quarters. How confident are you, and could you give us some perspective of the current timelines that you'd be working with?
Absolutely. So on the wheelset JV side with Ramkrishna Forgings, in this month itself, in the month of August, very happy to share that we've started the trials. We were taking hot trials and everything up to this point, and in the month of August, we've started officially the trial production. So that brings us to a very good state in the life of that project. I would say the timelines are very much on track, and as soon as the trial productions kind of finish and the testing on the first batch of wheelsets is done, we should be able to start supplying the first year supply to the Indian Railways as per the railway contract. On the shipbuilding side, again, a very interesting question. So what we've done as a company is decided to hive off the shipbuilding business into a wholly owned subsidiary of Titagarh Rail Systems, which would be called, or which is called, Titagarh Naval Systems Limited. And this company, TNSL, will focus purely on growing the shipbuilding business of its own accord, with the clear intention of growing it, and in a few years, if God is kind, to even perhaps list that business. So what we're doing there is we're creating a greenfield shipyard in a place called Falta, which is in the south of Bengal, where we had also applied for the subsidy under the Central Shipbuilding Assistance Fund, which we've also received, I'm happy to share. So we're investing about 610 odd crores there to develop a greenfield shipyard. And in the next few years, in the next, let's say, 4 to 5 years, we see this business having a revenue potential of almost 1,800 to 2,000 crores on its own. So we are very, very excited for the shipbuilding business to grow.
Wow. You do 2,000 crore in the next, you said couple of years, right?
4 to 5 years.
4 to 5 years, okay. And in fact, your 4 to 5 year or maybe 3 year guidance on top line is 8,500 crore, right, Pratish, if I'm not wrong. One, how confident are you of that? You want to add in to that?
So we normally don't give out top line guidance numbers. We normally share the production targets and the potential revenue with the capacity that we're setting up. So if I can break that down, on the PRS side, on the passenger rail side, we're setting up a capacity of 850 coaches per annum. And on the FRS side, we have an installed capacity of 12,000 wagons per annum. The average selling price of a coach is roughly 10 crores, and the average selling price of a freight wagon is roughly 35 lakhs. So, what we normally share is the total potential revenue that our facilities can generate as per the installed capacity. Because actually generating the revenue is also a function of booking orders and execution ramping up.
That's true. That's true. But on the passenger side of things, Pratish, you have to say you've got a very healthy order book already there. It's all about execution, right? I mean, and therefore you should be somewhere in that ballpark, right? Give or take 1,000 crore here or there.
That will be hard for me to comment on, sir, because we don't normally share forward-looking numbers. So I'll refrain from commenting.
No, sure. Point taken. Thank you so much, Pritish, though, for coming in and
Thank
speaking
you.
to us. Really appreciate
Thank
it.
you very much. Bye-bye.
All right, completely timed out on this edition of All About Your Company. Hope this was fruitful. Thank you so much for tuning in.